Hare Krishna. Welcome to Tax Guru YouTube channel. This is CA Rohan R. Pingai, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. So today we are going to discuss on a special topic, that is mechanical approval by specified authority under Income Tax Act. So let's dive into it. Let me allow to share my screen. Yes. So reassessment proceedings under the Income Tax Act represent what one of the most powerful tools available to the Income Tax Department. However, because reassessment can disturb concluded assessments and reopen what past matters, the law imposes important procedural safeguards. So one such safeguard is the requirement of prior sanction from a specified authority before issuing notice for reassessment. So in practice, what happened is that courts have repeatedly observed that such sanction must not be granted in a mechanical or routine manner. The sanctioning authority must apply independent mind to the reasons recorded by the assessing officer. So our today's session will discuss the statutory framework, the role of specified authority, the concept of mechanical approval, judicial interpretation, and practical implications for taxpayers and professionals. So let's start with it. First, understand objective of the session. So we will see the objective of this presentation is fivefold. First, we will briefly understand the reassessment mechanism under the Income Tax Act. Then particularly after the changes introduced by the recent Finance Act. Second, we will analyze the role of the specified authority under Section 151 of the Income Tax Act 1961, whose approval is mandatory before issuing the notice for reassessment. Then third, we will understand that the constitutes what constitutes the mechanical approval, a concept developed through the judicial pronouncements. Then fourth, we will examine the important judicial rulings which have clarified the standards expected from sanctioning authorities. And finally, we will discuss the practical implications for taxpayer, chartered accountants, and tax practitioners when dealing with the reassessment notice. So let's move further. Let's understand reassessment under the Income Tax Act 1961. So reassessment proceedings are governed by a cluster provisions. Section 147 empowers the assessing officer to assess or reassess the income that has escaped the assessment. And Section 148 deals with the issuance of a notice requiring the assessee to furnish a return. Following the legislative reform, Section 148A now prescribes what pre-notice procedure, including inquiry, opportunity to the assessee, and passing of an order. Section 149 prescribes the time limits for issuing the reassessment notices. And finally, Section 151 mandates what? Prior sanction of a specified authority before issuing notice under Section 148. So this sanction requirement is a statutory safeguard against the arbitrary reopening of the completed assessments. And that is the one of the important part which we are going to discuss in detail. Next, legislative intent behind the sanction requirement. The requirement of a sanction is not merely procedural. It is intended to serve substantive purposes. The legislature recognized that the reassessment can have serious consequences for taxpayers. So therefore, before reopening any assessment, an independent superior officer must review the reasons recorded by the assessing officer. So this ensures what? Prevention of arbitrary action, independent administrative scrutiny, protection of taxpayer rights, and greater accountability in the tax administration. So the sanction under Section 151 acts as a check and balance within the system. Let's move further. Understand the specified authority under Section 151. So the authority competent to grant sanction depends upon the time period from the end of the relevant assessment year, where the notice is proposed to be issued within 3 years, sanction must be obtained from the principal commissioner or a commissioner or equivalent authority. Where notice is proposed beyond 3 years, the law requires approval from higher authority, such as principal chief commissioner or chief commissioner. So this tiered structure ensures what reopening older assessment is subject to stricter supervisory scrutiny. Next, procedure for granting sanction. The process generally follows 5 steps. First, the assessing officer must record reasons demonstrating that the income has escaped assessment. Then second, these recorded reasons are forwarded to specified authority. Then the third, the authority must examine the reasons recorded by AO, underlying material, and the legal justification of it. Fourth, the authority must record its own satisfaction that the case warrants the reopening. And then only after such satisfaction can the authority grant the approval for issuing notice under section 148. Moving further, let's understand what is mechanical approval. So the expression mechanical approval has emerged from the judicial decisions. Mechanical approval occurs when the sanctioning authority grants approval without independently examining the reasons recorded by the assessing officer. For instance, in many cases, courts found that the authority simply wrote words such as approved or yes satisfied without any indication of application of mind. So such approvals indicates what the authority merely acted as a rubber stamp rather than performing its statutory duty. So courts have consistently held that such mechanical sanction defeats what the purpose of section 151. Moving further, let's see judicial principles on the sanction. So judicial precedents have consistently emphasized that the sanction under section 151 is not empty formality. Courts have laid down certain principles. The sanctioning authority must apply independent mind to the reasons recorded by the assessing officer. The authority must consider whether the material actually suggests that income has escaped assessment or not. The satisfaction must be real and meaningful, not merely ritualistic. So, if approval is granted casually or routinely, courts may treat such sanction as invalid, rendering the entire reassessment proceeding as void ab initio. Let's see important judicial precedents. So, several important judicial decisions have shaped the interpretation of sanction under section 151 and clarified the meaning of mechanical approval. We will see one by one. The first landmark decision is Shugmal Rajpal versus S.V. Chalia, where the Supreme Court held that the commissioner must carefully examine the reasons recorded by the assessing officer before granting approval. In that case, the sanction was granted casually, and the court held that such mechanical approval could not justify reassessment proceedings. In United Electrical Company Private Limited versus CIT, the court, Delhi High Court held that a mere endorsement such as yes, I'm satisfied doesn't demonstrate the application of mind by the sanctioning authority. Similarly, in German Remedies Limited versus DCIT, the court emphasized that the sanctioning authority must analyze the reasons and relevant material before granting any approval. In NC Cables Limited versus CIT, Delhi High Court reiterated that the requirement of sanction is meant to ensure the supervisory control and not to serve as a rubber stamp formality. So these decisions clearly establish that the approval must reflect what conscious and independent satisfaction. Moving further, let's see indicators of the mechanical approval. So courts have identified certain indicators that suggest the approval was granted mechanically. One common indicator is the use of single word approval such as approved, yes, or satisfied without any explanation. Another indicator is that the absence of any discussion regarding the reasons recorded by the assessing officer. Mechanical approval may also be inferred where there is no reference to the underlying material forming the basis of reopening. So in some cases, courts observe that Identical language was used across the multiple files, suggesting that approvals were given routinely without examining each case individually. So, if the sanctioning authority fails to record its own satisfaction or reasoning, it strongly indicates that the statutory duty under Section 151 has not been properly discharged. Next, consequence of mechanical approval. Mechanical approval can have serious legal consequences. If courts conclude that sanction was granted without application of mind, the approval itself becomes what? Invalid. And once the sanction is invalid, the notice issued under Section 148 loses its legal foundation. So as a result, the entire reassessment proceedings may be quashed by the courts. So this principle flows from the idea that the requirement of sanction is a mandatory condition precedent for initiating the reassessment proceedings. Therefore, failure to obtain proper sanction renders the entire proceedings void ab initio, as I said in earlier slides also. Next, judicial emphasis on application of mind. So, judicial pronouncements consistently emphasize that the sanctioning authority must apply their independent and conscious judgment. The authority must examine whether the reasons recorded by the assessing officer genuinely demonstrate that the income has escaped assessment. This involves reviewing the supporting material and evidence relied upon by the assessing officer. So the authority must also assess whether the reopening is legally sustainable or not, particularly with respect to limitation periods and statutory conditions. Only after such examination should the authority record satisfaction that reassessment proceedings are justified. So this requirement ensures that the reopening is not initiated casually or arbitrarily. Let's see safeguards for taxpayers. The requirement of sanction acts as an important safeguard for taxpayer. First, the law mandates prior approval from a superior authority, which introduces a supervisory check. Second, courts have the power to judicially review the approval process and ensure that the statutory safeguards are respected. So third, taxpayer have the right to challenge the reassessment notices before appellate authorities or courts if procedural requirements are not satisfied. So these safeguards ensure that the extraordinary powers of reassessment is exercised by department fairly, responsibly, and within the legal boundaries. So very important to note this. Let's see practical implications for professionals. For chartered accountants and tax practitioners' point of view, the issue of sanction has significant practical relevance. Whenever a reassessment notice is received, professionals should examine whether the proper sanction under Section 151 has been obtained or not. They should carefully review the reasons recorded by the assessing officer and the approval granted by the specified authority. If the approval appears mechanical or lacks proper application of mind, there may be grounds to challenge the validity of reassessment proceeding. Therefore, scrutiny of the sanctioned documents forms an important part of defending the reassessment cases. So, key takeaways from today's topic. So, let's summarize the key takeaways. Sanction under Section 151 is a mandatory statutory requirement before issuing any reassessment notice. Approval granted by the specified authority must reflect what independent application of mind. Mechanical or routine approvals defeat the very purpose of the safeguard of the reassessment proceedings and are not acceptable in law. Courts have consistently scrutinized such approvals and have invalidated the reassessment proceedings where sanction was granted mechanically. Therefore, both tax authorities and a professional must treat this requirement with a seriousness and diligence. So, while concluding, we can say that a sanction is a statutory safeguard. Approval must reflect genuine satisfaction and independent scrutiny. So, reassessment powers are essential for ensuring what the escaped income is brought to the tax. However, because these powers interfere with the completed assessment, the law incorporates procedural safeguards. One such safeguard is what? Requirement of prior sanction from a specified authority, and this sanction must not be granted mechanically or as a mere administrative formality. Instead, it must reflect the careful scrutiny, independent judgment, and genuine satisfaction. So, judicial decisions have repeatedly emphasized what that the sanctioning authority must not act as a rubber stamp. Mechanical approval undermines the purpose, very purpose of the law, and can invalidate the reassessment proceedings and can be a void ab initio. For tax administrator, these requirements ensures accountability. For taxpayers and professionals' point of view, it provides an important layer of protection against the arbitrary reopening of the assessment. So that's it for today. Thank you. Thank you so much for patient hearing. So if you want, you can email me, WhatsApp me through mobile number, or you can also comment below the video any suggestion, observation, any queries, any questions. So please let me know. Thank you so much. If you are not yet subscribed the Tax YouTube channel, then do subscribe it for latest updates and video series like this. Thank you so much once again. Bye bye. Take care. See you soon. Hare Krishna.